Amid a global pandemic and a recession, this was always going to be a reporting season for the history books. And the winners and losers were varied, from Qantas's $2 billion loss to iron ore miner FMG's $6.5 billion profit. Analysis by CommSec reveals 75% of companies reported a statutory net profit, down from the average 90%. And in bad news for investors, many companies slashed or abandoned dividends.
That's understandable. Companies aren't making some money. If they're not making some money, they're not paying dividends.
Some retailers were big winners, but not all of them. Scentre Group, which owns Westfield, reported a $3.6 billion loss. And it's locked some stores out in a bitter rent dispute that's likely to impact next year's results too. The online shopping boom doubled Afterpay's customers, but the buy now, pay later company is still to turn a profit. The appetite for gadgets saw JB Hi-Fi's profit jump, and shareholders of online retailer Kogan will take home an increased dividend.
Anything that was doing online had a record high because the results have been very strong, and the same with tech.
Wesfarmers posted an 11% jump in sales revenue thanks to the rush on home office gear like chairs, desks and printers, as well as DIY goods from Bunnings. But it wasn't enough to lift profit, which was down 69%. With most travel grounded, that sector had some of the worst results. Qantas warned of more pain to come as it posted a $2 billion loss. 5 days later, it sacked another 2,500 staff. Travel agents, Flight Centre and Webjet also in a nosedive.
We had seen some capital raisings ahead of reporting season for a couple of the names to make sure they had the balance sheets to get through this period.
While the decline in property prices hasn't been as steep as originally forecast, interest in the property market has increased, which has led REA Group to a 7% profit jump. The banks slashed and, in Westpac's case, deferred their dividends after the regulator warned they should keep half of their profits in the COVID-19 kitty. CBA's profit was up 12%, but warned the next few months will be hard for some mortgage holders.
Clearly there'll be some situations for customers which don't look viable on an ongoing basis, and so there may be some tough decisions required.
AMP's half-year profit plunged 42% as it fought off reputational damage amid an ongoing sexual harassment scandal. BHP remained stoic despite its 4% fall in profit and expected dip in demand for iron ore.
It'll be in kind of mid-2020s where we then start to see Chinese steel demand move into a little bit of decline.
Rio Tinto's half-year profit also took a hit amid the fallout from blowing up a sacred site, but it increased its dividend to shareholders. Fortescue Metals Group posted a big profit jump, and gold miners Evolution Mining and Newcrest enjoyed the benefits of record high prices. Overall, analysts say this reporting season was not as bad as initially expected, but the worst could still be to come.
What we will need to see from companies from here on, though, is a lot more updates.
While most companies shied away from giving guidance on what the next 12 months holds for their operations, one thing's for sure. With no vaccine, hard borders and a globally increasing infection rate, COVID-19 is likely to dominate the economic landscape for some time to come.